So in today's video, we are going to talk about directional bias. So literally, directional bias is market trend over a long period of time. Let's say market trend. We know market trend is made up of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows for the uptrend. And then directional bias. If the directional bias of the market is bullish, that means the market will be bullish for a long time, maybe let's say space of a month or 2 months or maybe more. Now, in a trend, you can have switch of trend. Now, during this phase, market is on a retracement. Now you see market is on a downtrend. Does not mean the bias has changed to bearish. This is just a retracement phase in the market. So that is just literally the difference between directional bias and market trend. So these two things work hand in hand, but most traders get to confuse them, take one for another and all that. So yeah, that's just how it is. Let's look at this. Let's look at this. How does directional bias really work? So this is Bitcoin. So for now, we can see that Bitcoin has been trending downwards. This is the daily time frame, mind you. In our last videos, we talked about candlesticks telling a story. So you can see break of structure here to the downside. Yeah, this one is a break of structure to the downside. And if you check to this other hand, you can see a break of structure here. So let's just break of structure to right here. So you can see that market is generally in a downward trend. Actually, market did not break structure here fully, but you can see this week spike down, and that you can take that for a break of structure. But for a clean break of structure, you need a body which you can actually drag here. But let's just use this for a break of structure. And then right here, you will be asking yourself, what will market do? People expect market to go into zones like this, supply zones. Don't worry, now we'll be talking about supply areas, demand areas. Expect market to push into supply zones, but there's another year which market have actually used to fail this move to the downside. So market is on another downtrend wave, uh, which market has just tapped in, and you can see the sell-off started and it took out this order low. So you can see there's another break of structure to the downside. This is to show that the sell movement is really strong. Market is on a bearish side. So the directional bias for Bitcoin USD has been bearish for this has been since May 2026. See what I told you? That directional bias is over a long period of time. You can see since May 2026 till June, we had a buy continuation, a buy retracement around June. Then market has been bearish again from June to July, and then we're almost running out of July. We have this little buy to the upside, but now, as I was saying earlier in the video, that bias is a long term, while trend is over a short term. You know, bias is more like giving a whole idea of the long term range. If we go lower to, like, let's say our 2-hour time frame, you can see that this whole zone that has been bearish, we still have buy movements to the upside here. Now buy movement to the upside. Market both move to the upside. See market both here move to the upside. Market both here move to the upside. And don't forget, market has been bearish. Market sold up here to the downside from here. We had a big sell to the downside. Consolidation. consolidation, consolidation. Then we have a confirmation here. Have another huge buy. This buy here has failed up here, and this is the same buy that is going continuing. So bias is like a long term something where um the trend is like a short term. The trend can fluctuate, when it reaches a common demand zone or a supply zone, it can just send back to the opposite side. But the bias keeps going for a long term. So for a long term, you are bullish. And then we can see another one here. You can see here. This was another directional bias for still Bitcoin USD. You see, market has been on an uptrend. Structure here, structure here to the upside. Broke structure here to the upside. You can see there was a body break after multiple sweeps. Market back to this demand area and continued by to the upside. You can see market coming back to the demand area. And then we have a buy from here to the upside. Now, if you go lower to, let's say, a 2 hour time frame also, you'll see that this whole zone has actually been a possessor of multiple mini time frames, buy and sell here and there. So let's just check this out. Okay, let's just check this out. Let's see where the zone we mapped out, where the zone we mapped out. Right over here. I have to switch time frames because smaller time frames are taking years to load right now. So yeah, just right here. We're gonna pop up soon. We're gonna come up soon. We're gonna come up soon. You know when this is taking time to load, you're supposed to load faster than this. You're supposed to load faster than this. But anyways, it's literally going to be the same thing I showed you earlier. And then we have another move to the upside here. Another move to the upside here. And see market broke structure here. Broke structure here. But it could not feel high enough. So it came down around this demand zone, pumped up again from here. And see market kick off. Okay. Broke structure here. And then market broke structure above here. Can see market after this break here, after this cut structure right here, market came down. So from the zone, came down here. From this demand zone, market started buying, break structure to the upside, come down to this supply zone, continue buying. Mind you, on the daily time frame, so you don't trade daily time frames. I don't trade, me personally, I don't trade daily time frames. I just use them for my bias and all that. So that's just it. You can see the market break structure to the upside. After it was a multiple breakup structure, what we used to call double breakup structure. It was a breakup structure here, and there was another breakup structure just right there. So market came down to this demand area and started buying. So if you check your lower time frames too, all these areas are very cool zones. You see that there were sell setups in between those zones, and in the same proportion there were buy setups too. So you see that market has just been up and down, but bias shows you the direction of the market over long term, while the trend is like a short term something. Let's say bias is a trend on the higher time frame. Because for me, I trade the lower time frame. So when I'm using market bias, it's like I'm saying, okay, over the space of 1 month, this is where market is going to possibly be trending towards. This is where market will be moving towards and all that. So I don't trade blindly. I know where the market is going. I know where the people on the higher time frame are trading towards and all that. So you can see here after market book structure here came back, tapped into the supply zone and started selling off. So you can see there was a sell in between before this buy kicked off again. So people that are on the lower time frame trading with the trend, they are going to get more opportunities than people that trade with higher time frame. But anyways, that's just it. So that's market bias for you. Resource for sales. So let's go over it again. But if I'm going to put this in the best explanation possible, this is a bias. You just come into major supply zones and continue moving. While inside a bias is a trend that has been higher highs, higher lows, like on a lower time frame. So now we have a reversal, our MSS market structure shift, and you see something like this, taps into our supply, our demand zone, goes up again, same pattern, up, down movement, up, down movement, comes back here again, taps into supply and market growth. That's just literally the difference between market trends and market bias. So yeah, so market has been bearish for over a long time. And if you check your monthly time frame too, even your weekly, you're gonna see something similar from the weekly to the monthly. It's just the same thing repeating over time. You see, it's just the same thing repeating over time. You can see this point that we marked out in the market. That just been the same thing, just literally the same thing repeating over time. You break here, come back, test that zone to use buying, all that. So we can see now Bitcoin has been bearish for months, and then I think the current sell that Bitcoin is on was failed. Yeah, this is it from the 2 months. Literally, its market is coming back to retest this zone. Market is still within this range. So for now, we are still expecting a possible buy on Bitcoin from this range here up. Market will surely dip down lower. I don't know. We're expecting a buy from this range up to take out this other high, just like we do when we are trading trend lines. Sorry, yeah, trend line, break of structure and all that. So the one that failed to sell at volatility here, the supply zone here failed in this current sell back to this demand zone. So since market has been in an uptrend for a long time, market has been even in a monthly time frame, market has been in an uptrend. You can see series of high breaks, series of high breaks, series of high breaks. So that's just it. That's just how the market structure goes. That's a series of high breaks. So this to tell you that market is on up uptrend over a long term. Long term goals, market is on an uptrend. So if you have been on a buy, you can safely hold it. From this level, you can hold it. Because you're very sure market of this order. That's just the same thing. I think they have all been buying and buying and buying. And so same thing with Ethereum. If you go down to the daily time frame, you can see the sell. Okay, market has rallied into the supply zone, so we are expecting to sell lower, take out this low right here. Okay, to sell lower, take out this low, give us a break of structure to the downside. But this other move here failed to break structure to the downside right here. So we are expecting something like this, a break to the downside, and then that's just what we're expecting on Ethereum. So at least mm, lower levels on Ethereum. Ethereum too has been bullish for a good time now. Ethereum has been bullish. So yeah, good time on Ethereum has been bullish. You can see Ethereum will have down. So this is demand zone. And totally buying from this demand zone. Just like when you are doing the trend, so the highest point of the market took out these highs, took them all out. So that's where Ethereum has been buying from. And then Ethereum is after that the supply zone for the current market price. And that's just how it goes. This sell originated from around this axis. Ethereum started selling around here. Probably if you go, yeah, supply zone just right here. Supply zone right here. And see this will fail this Ethereum. So Ethereum is actually now downtrending, break of structures. And see even the supply zone here failed this sell. This very sell that happened here. This sell here was failed by the supply zone. Just that's just like a good. That is how it goes. That's just like good. So in our next videos we'll be talking about other blocks, breakout blocks, supply and demand zones, imbalance, inefficiency, efficiency, and the rest of it. For now, see you in the next video.